All right, welcome everybody. I want to take a moment and say thank you for joining us today. Really excited about the webinar, the content, and our host as well. So welcome to Unlocking the Secrets of Fraud Prevention, 23 Expert Insights Revealed from the Fraud Fighters Manual Sneak Peek. My name is Aditya Vempati. I'm the head of marketing at Unit 21 and GM of our Fraud DAO Consortium product. And joining me today is Unit 21's head of fraud risk, Alex Faivusovich. For those of you who are familiar with Unit 21, we provide a risk and compliance infrastructure that allows companies to ingest any type of data for transaction monitoring, case management, all without writing code. So you can streamline your operational workloads, as well as automation for things such as SAR filings, as well as FinCell filings. Alex, do you want to introduce yourself?
Thank you, Aditya. My name is Alex Faivusovich. I'm the head of fraud risk here at Unit 21 and one of the co-authors of the Fraud Fighters Manual. Very excited to be here with you to share this sneak peek into the book.
Great. So thank you, Alex, for joining us today. So we're really excited about this. We've spent 6+ months gathering experts from Brex, Mercury, Lithic, Treasury Prime, Pinwheel, Nibru, and Unit 21 for these insights that we packaged together into the Fraud Fighters Manual. A lot of you already on the call may have pre-ordered it, and you should have in your email gotten a link to get the PDF. So take a moment, look for a subject line should say your digital pre-order copy is ready. So take a moment, click on it, and you'll have the manual in hand as we talk through the various insights from every chapter. So for us, a few quick housekeeping items we'll cover, as well as talk about the manual, why we did it, takeaways, Q&A, and closing thoughts. For us, the goal of this webinar, right, is to really give you actionable insights that you can implement immediately, regardless of where you are in your fraud and money laundering journey, combating journey. So basically, either you're just starting out and you've launched a fintech, crypto, or neobank, or you're an expert and you've had systems in place for many years. We want to give you tips, tactical things as strategies they can implement right away to fine tune what you've been doing or get started. And our aim is to really equip you with these tips and strategies so you can effectively stop bad actors. So let's dive in. First off, housekeeping. We're recording this webinar live, and we will have the recording for you to access afterwards so that you can actually review it, look at things that may have been interesting to you and recall. And Q&A, we love questions. Please send them in. We will answer them at the end so we can dedicate attention to it and not go back and forth between topics. And then what we're really excited about is this is actual manual. We've actually printed it. We've actually wrote and developed content around it, and there's a physical copy. So we're giving away 50 printed copies to attendees. And we'll let you know after the webinar is done if you're one of the first 50, so we can send you a printed copy of the manual. And with that, let's get started here. So why did we write this manual? For us, it was really that we were sensing a lot of frustration in the industry about not understanding what fraud is exactly, not understanding how to combat it, not understanding what goes into it, how it gets developed. And we really start seeing fraud as like becoming the F word, and we don't want it to be. We want it to be something that isn't taboo, isn't scary, and you're able to actually address it and make sure you go through and solve the issues you need to solve. And that requires that we collaborate with one another. Fraudsters are collaborating on the back end. They are working together to have fraud rings and hit up different institutions or cryptos or neobanks or fintechs. Why shouldn't you as fraud fighters and compliance heroes do the same to combat fraud and money laundering? And that's really why we spent a lot of time curating these insights from all these companies. And one of the things that we found is that fraud is really growing. And there's some key trends here that we wanted to make sure folks understand. One, friendly fraud. It's growing by leaps and bounds. According to a survey for the 2023 Digital Trust and Safety Index put together by Swift, 16% of consumers admitted to having committed payment fraud or knowing someone who has. That's a pretty big deal. And digitization, according to the TransUnion 2023 State of Omnichannel Fraud report, 80% increase in digital transactions resulted in 80% growth in suspected digital fraud attempts globally from 2019 to 2022. And during the pandemic, we found that prosecutors working across fraud cases involving pandemic relief funds said the pandemic fraud was so rampant that in 2 years, they'd only gotten started on their stack of cases. And according to the FBI's annual internet crime report, the amount of complaints from internet fraud rose from 467,361 in 2019 to 700,901 and 70 in 2020. And in 2021 and 2022, that number remained over 800,000. So with that in mind, I hope you guys can see why we put this together, why we think fraud is a very, very key topic and one that all companies need to collaborate in combating together, even in their individual efforts or sharing knowledge. So with that, Alex and I are going to share some of the key takeaways from each one of the chapters, have some insights for you guys. As I said, they can apply right away and get started. So with that, I want to make sure you guys see that these are all the companies that participated in it. There was a saying we have at Unit 21, teamwork makes the dream work. And I couldn't be more proud of all the collaboration industry-wide that's resulted in this. So with that, let's jump into it. Chapter 1, know your fraudster. And something we learned chapter 1, right? It was authored by Pinwheel, is that there are many types of fraudsters with varying degrees of organization and competency. And so I want to ask Alex, right? What is important for organizations that are just getting started with fraud prevention to understand around knowing a fraudster?
Yeah, I really like this chapter and the approach Pinwheel took with it in really characterizing the different fraudsters that are out there. And it's important to understand that financial crime is an industry, and that industry is feeding off directly from fintech, crypto, and traditional banking in a way. And within that industry, you have different experts, you have different type of fraudsters, different bad actors who do different types of financial crimes. So it's important to be able to distinguish between those. But I think if you're just getting started, if you're just launching your first, fintech startup, the key to success here is to understand your organic customers, understand who are the people who by nature will adopt your product. And once you have a good understanding of who your organic customers are, it will be much easier for you as you scale, as you grow, to distinguish between a potentially good user or a potentially bad user. And at the end of the day, if you're in fintech or in the crypto space, your goal is to onboard as many good customers as you have, keep the bad actors out, and create as less friction as you can. And those are the point really that Pin will point out in this chapter.
So let me dig into this, Alex. As we said, we have a spectrum of people, right? Those are just starting on their fraud fighting journey, and those are experts. So are you saying for those who are just starting out, it's really key to understand their organic customers and fine tune their target audience, so that way you can get to those who are actually fraudsters in the database? So that part makes sense. So what about the more established firms?
I think for more established institutions, once you have a good amount of customers who actually using your product, you can better understand the way your product is being used. And here you can take it into two different directions. One direction is understand whether or not the initial design of the product is actually fitting your audience. So what you developed, what you designed for your customers, and how they use it. Are they go, side by side? Does it even make sense? The product makes sense for your customers. If not, if you find any gaps, you can always create product adjustment. But you can also understand how bad actors or fraudsters using your product. And this is where you will usually find the gaps in your fraud strategy. So basically, it's not always the perfect customer walking the perfect path and using the product the way you design it, but rather understanding how a bad actor is utilizing your product to execute whatever financial crime they try to do. And once you have enough information, once you have enough data, you can take, behavioral modeling into consideration. You can really start to do some, deviations from, okay, I've known this customer for 6, 9, 12 months. This is how they usually interact with me. If I see certain changes in their behavior, in the way they use the product, in the way they access the product, what it tells me, what red flags should I be raising?
Got it. So basically you're saying for established firms, it's really critical to monitor any deviations on the onboarding steps and look at the gaps that you have. So that way you can actually flag these anomalies and then identify which ones are bad actors, which actually goes towards strengthening your fraud prevention measures, right?
Yep.
And so let me ask a few questions here, because I'm sure the audience will want to know, like, how long do you think it takes for folks to get started, to get up and running? And how often do you think the experts need to fine tune and monitor their systems? And how do you think engineering resources impact both of these, getting started or as well as being an expert?
Well, to get up and running, you can do that pretty much within a few weeks, right? If you want to create a very basic account opening fraud strategy and transaction monitoring fraud strategy, it's not very challenging to do so, to have a very basic program in place. But the key to success here is really to fine tune it and adjust it to your goals and your KPIs. You need to make sure from operational standpoint that you can actually go and monitor everything that you wish to monitor. And in terms of having the controls in the right places and closing the gaps in the product that you identified, are they actually making sense? Do you have enough people? Do you have the right tech stack to execute all your strategies? So it's very easy to set up, but in order to become a pro, it takes a lot of time, a lot of practice, and really fine-tuning your program.
Yeah, that's actually key, right? And I think this leads very smoothly into, as we talked about, knowing people and onboarding them. A topic that is very near and dear to your heart, as you were the author on this, which is around comprised and synthetic identities. As we jump into this bit, right, you actually wrote this. I'd love for the audience to know, like, what is really the difference between a comprised and synthetic identity? I think people clump these together, but they are very key differentiators here and how you approach it, especially around fraud or money laundering. I'm sure this is something the audience would love to hear more from you on.
Yes, I had a great experience and great pleasure writing chapter number 2, talking about compromise and synthetic identities. On a very high level, compromised identity is a set of PII that belongs to a real person in real life that's being used by a third party, by a bad actor, pretending to be that person in order to get access to a credit line or open a bank account or something around that. With synthetic identities, we usually refer to having elements of the PII who might belong to a real person combined with elements that don't belong to that person. So, for example, you can be the first and last name of the person, but we will change the date of birth. We might change the social security number. We might change the address. So we're combining real and fake elements together in order to create a synthetic identity. And we call it synthetic simply because it has no representation in real life. Now, in terms of what happens next, and usually how fraudsters really use those synthetic identities, they will go and they will apply for a small credit line, maybe a secure credit card, something very, very entry level, let's call it that way. And usually they will get declined on the first attempt to actually go and get a credit line. But what it does, it's actually when they apply, a record for that synthetic identity is being created within the bureaus. So now all the bureaus think that, okay, this identity is actually, something legitimate, and they keep it in the record. Now they can use that synthetic identity and pretty much take it and add it as a additional user on already established credit line. And this is where the cooking process starts. And cooking process can be anywhere between a few months, maybe a few years, depends on what you're trying to achieve. But within this cooking process, what they will try to do is to create a legitimate history, to create a history that on paper looks like a real person, paying bills, paying credit card bills, make sure that whenever in 1 year and 2 years, they will want to use that synthetic identity to a large scale fraud, maybe to get a large credit line or maybe apply for a large loan. The person who will be reviewing that credit history will actually think, hey, that's a real person. He's been around for so many years. He's been paying all his bills. Everything was on time. So I think I can go ahead and approve them.
Got it. So just want to remind the audience, if you have any Q&A, please send them into the Q&A tab. We'll be answering them at the end of towards the end of the webinar. But one thing here I want to stop, right? There's a lot that goes into compromised synthetic identities and creating them and identifying them. So what are some best practices for detecting and preventing synthetic identity fraud? Because it seems very complicated and easy to fall for.
Well, if you're specifically concerned with synthetics, one great way to go about it is to query directly against the SSA, right? If you query directly against the SSA, you can pretty much ask, do you have this first name, last name, social security, date of birth on your database? And there is only yes or no answer to that. It's expensive. It creates a lot of friction. You need a consent from the applicant to do so. So not many financial institutions are willing to go through that process. But if you're not going through that process, many KYC vendors today offer different tools in order to combat synthetic fraud. But even from product perspective, you need to understand how a bad actor using a synthetic identity might manipulate your product and use it for their own needs. And the most common use case is money mules. Well, basically, they will use a synthetic identity in order to bring money to a platform, use it as a funnel, and then take the money out, move it somewhere else, and differentiate from how bad actors use compromised identities on your product, and how they pretty much create the opportunities using just someone else's identity. There's element of time. Usually bad actors who use compromised identities understand that there's certain amount of time they can go and use it before the actual owner understands that they've been a victim of identity crime. With synthetics, they usually have more time to operate, and they're also not worried about getting caught, because even if you caught them, there's no repercussions in real life. There's no real person who will actually take the charges. So it's important to understand the gaps in your product and how different bad actors using different identity types will use your product.
So one of the things, right, you mentioned KYC, and I think fun fact for the audience here is during the pandemic, one of the biggest things that we found during our research and talking to experts was that COVID-related fraudulent charges hit $242 billion because people didn't invest in good KYC. And this is like a big, big deal. And as Alex was saying, it's key to understand and have good KYC tools or purchase the SSA if you can get that level of authorization. So now I want to ask Alex, you mentioned something, and I think the audience will be really curious because this goes against like what fintechs, cryptos are trying to do, which is constantly grow. How would you introduce a bit of friction onto the onboarding process? Like, what are some examples that you've done, and how do you think it helps, or do you think it causes losing on customers?
Well, the easiest friction to introduce is to have ID verification, right? But when you do ID verification, you also need to understand your customer base and to who you're catering. By nature, you might have, if you're catering to younger people, they might not have the appetite to actually go through ID verification process. In general, this generation is a very fast living, and I'm not sure they will be willing to spend 5 to 6 to 7 minutes to actually go through your onboarding process. If you cater to a slightly older population, then you will actually see a much higher approval rates. But you need to understand that from your numbers, because if you know your organic customers, you probably get a better sense of feeling whether or not they will go through something like this. But not only on account opening, you can introduce friction built in within the product, built in within your app. For example, if you're worrying about, push authorization fraud, and you want to make sure that your customers are fully aware, okay, am I sending the money to the right person, or whatever I'm about to do, the money I'm about to send is irreversible. You can introduce friction there. You can have small notifications, small nudges, making sure that the time between, okay, I'm about to send the money and actually clicking the button within the app is, half second longer, maybe 1 second longer. The customer will stop to think, hey, am I sure I'm sending the money to the right person? Am I sure I know what I'm doing? So different way to introduce friction. And what I'm seeing so far is that consumers are actually happy with that friction. Consumers are actually taking this friction as a sign of you keeping them safe. So don't be scared introducing friction. I think we are at a times where most consumers actually appreciate it.
Great. That's really great insights, right? Especially when you're thinking about identities and friction, as it is scary. So let's go on to the next chapter here. This was written by Nibru, and it's about cryptocurrency fraud. And it is definitely on the rise, both because it's becoming more popular in terms of having crypto assets, as well as it's difficult to trace because of the inherent decentralization of crypto. But with that, we're seeing a lot more increased regulations to try to get the market to be more stable, not have many as swings that we've experienced in the last 12 months. But this is also resulting in more fraud happening. And Alex, what do you think organizations should do to protect themselves and their customers from falling victim to crypto scams, but at the same time, enabling customers to come on board because it is a currency and it's something people want a large upswing in and adoption in, due to this inherent decentralization of its nature?
Yeah, without taking anything away from this chapter, because I think it's really interesting, and I really like the way Nibru wrote this chapter into our book. But just 2 points from me is that whenever you interact with any other, crypto wallets, crypto accounts, make sure you can vet those accounts. Make sure you have very sophisticated on-chain transaction monitoring capability to really understand the source of the money and how they interact with your internal wallets. But if you're just getting started, if you're taking your first steps in building your own cryptocurrency company, you probably should invest early days into understanding how you will be working with regulators, how to make sure that you are compliant with whatever the regulator asks you to be, because I think this space will be more and more regulated in the next 5 to 10 years. So invest early stage into understanding regulation and what is expected from you, and also transparency to your end users. I think with everything that happened in the past 2 years in that market, maybe new traders, people who are just getting introduced to cryptocurrency, are slightly concerned and don't fully understand where their assets are sitting, how their assets are being managed. So the more transparency you can provide to your end users, to your customers, the better.
Great. That makes a lot of sense. I think you got to be more transparent and make sure they understand what's going on while helping them get on board and get the adoption. So I'm going to summarize here as we move on to the next section. Is for you to protect your organization, if you're cryptocurrency, what you're saying is critical to understand KYC, KYB policies in place, and then also make sure you're vetting your crypto partners and engaging with them for on-chain transaction monitoring or enhanced security. So that way you can make sure you satisfy regulators and at the same time reduce the amount of fraud that's happening. So with that, let's move on to our next chapter, which was account takeover. And this is interesting. This chapter was written by Treasury Prime and Mercury. And for us, really what we saw in talking to a lot of our customers, prospects, and industry experts was fraudsters are using phishing or other methods to get actual, information of accounts and get unauthorized access to actually go in and do things that maybe obviously others wouldn't do. And so account takeover fraud involves attackers not just getting access to your identity, but also going into your account and having access to it and being able to do things that maybe isn't in their general behavior. So this is the part I want to ask Alex is, how does this happen typically? And how can a company and organization think about preventing this, regardless of if they're novice or experts? And what are suggestions you would have? There are a few, obviously, we've summarized a chapter on, but obviously your insights will help as well.
Yeah, and I think just to understand that both Treasury Prime and Mercury have such a great, unique perspective on account takeover, because they see so many different fintech programs and they see how those fintech programs are being attacked. Really fascinating chapter. I don't want to take away anything from it, but you should really, if you're into account takeovers, you should really read about the 4 different stages that they mentioned in the book of how account takeover happens. For me as a fraud fighter practitioner, I always ask myself why. Okay, why would a bad actor will try to take over my accounts? What is the immediate gain? What they can, what they can benefit immediately from taking over one of my accounts? Once you understand that, try to understand whether or not the behavior that will follow right after the account takeover is something I would expect from my customers to do on a regular basis. If you find a gap, this is probably where you should have the monitoring set place. In general, we are lucky because all of us are creatures of habits, and we operate in certain patterns. The better you understand the patterns of your good users, the better you can prevent account takeover. The better you understand how your users engage with your platform, the better you understand how they access and log in your platform, what types of measures they take to keep them safe. Are they using passwords? Are they using face recognition? Are they using always the same device? Are they using always the same browser? The better you understand if there is a potential bad actor trying to access their account and raise a red flag in a timely manner.
Got it. So now you talked about understanding their behaviors, seeing how they typically act on your platform or product. Let me flip it over a little. Ask who's most at risk to experience an account takeover? What does that look like? You know, you're good users, but what are ones who maybe not be or a little more cavalier or don't take security as seriously? Maybe like what does it look like? Who's most at risk to experience this?
I think everyone are at the same risk. If you have online accounts, you're at risk of being taken over. If you have an email address, your email address will eventually be leaked to the dark net, and somebody will try to hack your email address. And from hacking your email address to start taking over your accounts, it's a very short way. Remember that whenever hackers or bad actors, fraudsters, call them whatever you want, whenever they acquire your information, right? Let's say they got access to your email address, you become an asset to them. They will take everything they can from you. If you have 5 bank accounts associated with that email address, they will try to take over all 5. If you have your medical records, you have your maybe airline company associated, that they will try to hack all your accounts to gather as much information they can about you in order to pretend to be you, in order to take all the assets that you have within those different accounts and funnel them to themselves. So if you are online, if you're shopping online, if you have online banking, you are a target to those people.
Got it. So it sounds like it's not just behaviors or patterns, it's any existence of an online identity leads to account takeover. But then on the flip side, right, which is a great segue into our next chapter, is how do we actually do the proactive prevention, right? What does fraud prevention 101 really look like? And this chapter was written by Lithic. And really what Lithic, Zach specifically talked about was how do you build a robust system that can quickly take you from being reactive to fraud when you see it versus putting systems in place that you understand your users, good ones from bad, to taking a proactive approach and stopping fraud or preventing it rapidly. So Alex, would love to understand what are some ways you think folks can do this?
So ideally, we approach fraud prevention with, we look at the account opening side of things. And if we're satisfied with, the applicants passing all the checks that we put during account opening, we allow them to open an account. We start, traditional transaction monitoring. So basically, we use either a rule engine or any machine learning algorithms or a combination or a hybrid solution of the two. So basically, both creating strategy that we think should be in place, but also relying on a machine learning model to provide us some type of scoring in order to get our attention to certain activities on our product, on our platform. That's the very basics of fraud prevention 101. And I think this chapter is really talk about, the boots on the ground and how people should take into consideration building this transaction monitoring strategy. But I always say, if you understand your account opening strategy, if you understand your new account strategy, and you understand what to expect from your users in the first 30, 60, 90 days, you understand all the way that money can flow into a platform and all the ways that the money can leave your platform, that's a good enough information for you to start in building a fraud strategy.
Got it. So rules engine is key, machine learning is key. How do you think the other side of this is like thinking through in terms of creating, building, setting up rules? There's a lot where people have in-house systems and others where they purchase from vendors. What do you think are some key things people need to look at as they make decisions in purchasing either one from like a transaction monitoring perspective?
One thing I always ask prospects or people from the industry is how your reaction cycle looks like. So from identifying a fraud problem to understanding, okay, I actually have a gap in my strategy. I'm not detecting this fraud in a timely manner. So how your reaction cycle looks like from the detection to the analytics part of things to actually deploying a new strategy and start capturing this new fraud problem that you discovered. The shorter the cycle, the better. And whenever you're looking for a vendor or a tool to fight fraud, always keep that in mind. Will that tool help me to shorten this cycle? Will that vendor can actually have the feature and tools I need in order to detect the fraud faster, do the analytics faster, to deploy the new strategy if I need to patch my fraud strategy and I need to close the gap, how fast I can do it. Usually this is a good way to start evaluating whether or not this vendor is right for you.
Some great tips here, things that we should be mindful. I think anyone that's regardless in their journey, just starting out or expert, obviously really great to understand and ingest. Now, want to talk more about the actual risk operations that go behind fraud prevention, right? What are the various things people need to think about from a team? Now we cover technology, but team, people, culture, right? Those are all three things that go into it. And we're really lucky to have risk operations written by two folks at Brex. They have some great insights, and Brex, you guys are pretty familiar with, is a credit card issuer, and they obviously deal with a lot of this, and their organization has been very vigilant and proactive, but we've been lucky enough for them to share their insights here. As we go through this, right, we've talked about crypto fraud, synthetic identity, account takeovers, and what it takes from a traditional transaction monitoring system. But this all fits into how does your risk operations work, right? It's just not tools, it's people, and they go work hand in hand together. And you need both of them to be on the same page to prevent fraud. And this is what this chapter really talks about. It talks about the people equations of it, leveraging the technology company-wide being enabled into working together. And I want to ask Alex, you have experience in this. What are some tips you have for the audience in building an effective risk ops team and program? How do you justify the investment to others? And what are some ways you think about evaluating the performance?
Yeah, and I think this is maybe one of the main reasons why I really like the outcome of this book, because our book really speaks to anyone in the fintech, crypto, or like even financial industry. It doesn't matter if you are responsible for advertising. It doesn't matter if you're responsible for maybe product. If you're part of a fintech team, you're responsible fighting fraud. And it's really about the team effort. It's really about how the product people who design the product take risk into consideration. It's really about the growth managers who have paid acquisition channels and how they measure the success of paid acquisition channel and take risk as a component into paid acquisition. So work with your counterparts in the company, work with the people who not directly responsible for fraud prevention, who don't have risk in their title, but make sure that they understand that fraud will impact their line of business as well. So definitely it's a team effort. When you build a team, it's always important to understand what are you trying to achieve, what are your OKRs, and how the team, and by building the team, will help you to achieve those. Not always throwing bodies at the problem will solve your problem. It's a really delicate combination of having the right tech stack, having the right tools, and having the right people, and keep training those people, keep training the personnel, keep investing in the people, and allow them to grow within their job in order to be a really good fraud fighting team.
Got it. So you've talked about the basics. Now I want to ask, which people I'm sure are thinking, given the economy and the macroeconomic conditions, what's your take on scaling risk operations teams? Like, when should you add headcount? Because you mentioned it's not all about throwing bodies, but what does it look like from a scale perspective? Is it more tech? Is it more people? How do you think about this? And what would you suggest for folks?
If we look traditionally at what happened in, let's say, majority of fintech companies, usually you will have the core team, the funding team, who will start a company. and everything is usually done manually, right? Everything is done in-house up until a certain point when you start to scale. So first of all, always ask yourself, do I want to scale and then think about, the tech stack and try and, if I have a fire going on, to put down the fire, or do I want to be prepared? So if you feel like you will be scaling within, let's say 6 to 9 months, maybe in 3 months, it's the actual time to start thinking about what type of tools, what type of vendors you need to bring. The next part is people. Okay, when do you start to bring people? When do you start actually building the risk and compliance teams? And here you need to keep in mind that from risk perspective, you want to be able to provide very good customer service. So you need enough people to address all the operational aspects of your fraud strategy, but also so those people can actually provide good customer service to your good customers. Because remember, we're not only fighting the bad guys, we're also protecting the good customers. When it comes to compliance, how many people you need to actually stay compliant, how many people you actually need in order to review all the different alerts, to make sure that whatever you need to file is being filed. And that comes directly with the scale and how fast your company is growing.
Got it. So I think there's a lot of stuff we've shared, right, in the last 35 minutes or so. And I want to make sure to summarize this, right? And that way our folks on the audience understand, right? And I'm going to go through chapters real quick, like from Know Your Fraudster. Want to make sure we control the onboarding process. We monitor deviations and identify gaps to strengthen fraud prevention measures so we can detect these bad actors, right, and prevent them. From a compromised synthetic identities, we need to invest in KYC tools early, add friction to the onboarding, and protect against fraud losses. And an example of this is with COVID related, where they had over $242 billion of it, and an example of things gone wrong. For cryptocurrency, it's really making sure that you're working with the regulators, you have enough information to show that to regulators and drive stability in the market, at the same time growing that space. To account takeover, where we need to understand our user habits, make sure that we know what good habits look like versus bad, and then enhance the platform security so you can prevent these takeovers from happening through understanding these behavioral patterns, which really leads us to thinking about fraud prevention as a whole, where we need tools like customized transaction monitoring that is flexible, regardless if you buy from a vendor like Unit 21 or you build in-house, which many folks do, and having the engineering resources that you can actually deploy to make these changes. At the same time, having data governance that lets you have access to this data so you can understand how fraudsters are thinking and get into that mindset and have it be cross-departmentally working together, which is really where risk operations comes in, right? This is the people side of it that works with the technology, making sure OKRs are shared across the team. People are curious. People are understand what fraud looks like and thinking of it baked in at the foundational level. So that's the summary. And now I want to take a moment. You should see a poll on your screen. We wanted to ask a quick question. And while we're conducting the poll, want to make sure to remind everyone, please submit your Q&A questions. We want to answer them. We've set aside time for that. I want to give you as much value as we can. And also make sure to go into your email and look for the Fraud Fighters Manual. Everyone who ordered it from a digital pre-order should have it in their inbox. And 50 lucky folks will get the printed copy of the manual. I think you can see it here a little bit. It's actually a physical copy and 168 pages, 39,000 words, and 6 chapters. So give it a few more seconds here to finish the poll, and we can move on as we have one more thing that we'd like to share here. With that, we'll go ahead and end the poll. And so one thing that I want to make sure to pause is we're actually, with the launch of the book, we're actually having a Fraud Fighters Manual live tour. We're doing a few events that are online or in person, as you can see from the screen. And these will be shared with everybody on the webinar as well to register. And we're going to be kicking that off starting in July. And this is the first of many, and we'll be having webinars or in-person events, and we'll be sharing the page for you guys to register on also as well. And with that, I want to jump into the Q&A section, as folks have a lot of questions that we're seeing come in. The first one that I want to kick into is from Scott. He says, great resource with cooking time of compromised synthetic. The commentary indicated on SSA/tools, but also mentioned that the profile made payments, various overtime, etc. What are the red flags would be recommended?
Yeah, I think when we I hope Scott referring to the money mules I briefly touched when I was talking about synthetic identities, but really when you design a product, you design it in a way that you expect a certain behavior from your customer, right? Let's say, I don't know, you design a premium product, for example, and you cater for, the top of the consumers, the richest 1%, right? You expect them maybe to move a lot of money, right? But you still limit your product based on certain criteria. So whenever you see activity that is way off of that criteria, and especially for a new account, because remember, money mules are usually detected within the first 60 to 90 days of account opening, this is a red flag. Also, remember that at the end of the day, bad actors, they don't really care about your product. You're just a tool for them. So if you see somebody who constantly moving money in and moving money out without actually enjoying a platform, enjoying a product, then you can probably realize, okay, this is just a tool for them to move money. So I would start with those probably.
Yeah, and the other question here, which was pretty cool, is what type of transaction monitoring rules best target synthetic ID fraud?
The way we use it in Unit 21 is that we treat transaction monitoring on 3 different levels. We have the entity level, we have the transaction level, and we also have like the account level. We like to monitor money mules on an entity level, simply because we want to understand all the ways and all the channels they use to bring money in, and then all the ways they use to bring money out. And if you monitor only one transaction type or 2 transaction type, you not always see the bigger picture. So whenever you try to create a velocity strategy, a velocity rule, make sure that you look at it from the entity level and take into consideration all the possible ways money can flow in and out of your platform.
That really helps, seeing money come in and out and making sure you're fully understanding it. Then the next one here is a great question, right? How can we undertake a fraud risk assessment, from Vasanta?
So with a fraud risk assessment, whenever we start this process, we usually try to identify gaps between the product and previous fraud losses. So we look at, let's say we ask customer, provide us maybe your top 20 fraud losses from the previous year. And we try to understand where those fraud losses coming from. Is there any specific channel that's being more used by fraudsters? What type of fraud we are seeing there? Is it the third-party fraud? Is it the first-party fraud? And once we have some ideas of how fraud was trending in the past year, or what was the significant fraud from those 20, 30 cases, we will go and try to understand, okay, the product was designed in a certain way, but still the bad actors find a different way to use it. Why would you consider still keeping this feature or keeping those limits available for your customers? And then we usually get an answer, yes, because we have many customers using those features, or maybe we have many customers who are reaching those limits. Then the adjustment process will start. We'll understand, okay, is there really something we can do to close the gap in order to limit the bad actors without hurting your good customers? This is on a product level. On a risk strategy level, we will go and see, okay, you had those 20, 30 fraud cases. What rules, what controls we can implement with your current tech stack or with Unit 21 that can actually go and help you close those gaps. But obviously on a very high level.
Yeah, And I think this leads to a great point, right? The next question actually I think ties really well to this. Like as you're doing the risk assessment, the other part of that risk assessment is also your organization and what you're doing. And Olivia had a great question. What is a typical risk/fraud organization structure and roles for best teams that take a proactive approach?
That's a good one. I think if you're building a risk team, I would always like to have dedicated people who understand your onboarding journey. And when I say onboarding journey, they understand every step of the way of the onboarding journey that your customer takes, every screen on the app, each time the customer clicks next, they understand the full funnel, they understand how deviation might look from one day to another on your onboarding funnel. Next thing will be your core team who will be transacting, who will be monitoring the actual transaction and the actual way your customers bring money in and out. Always have a dedicated people for the analytical part of things. Many times we find that people who do fraud operations, they don't have enough time to step back and do the analytics. So make sure that whenever new fraud is being discovered, or the operations team think there's new fraud being discovered, they can escalate those cases to people who will do the back office, who will do the analytics and try to understand, okay, is it really trending? And if it's trending, how does it compares to my general population? And once you have that, you need people who can actually go and deploy the strategy based on your tech stack. Again, it varies between different vendors, and how do you actually backtest rules, how you promote rules to production, how do you utilize your existing machine learning models. But I would say those are the core members of the team you should have.
Got it. So you look at that, you look at the structures, you look at how things are set up. Then I think this leads to like the practical application of it, that we have a question from Scott, which is around account takeover scenarios, right? You have your team, you have the structure, so they get it. But how do you make sure the rest of the company, Scott's asking, what are the recommendations that you can give so you can get the rest of the company to get on board for company-wide training or awareness?
I would start with awareness for the customers, actually, not for the company, right? We got to make sure that our customers are educated and they know how to access our product and how to do it safely. If, for example, we can help them, to create extra step, extra layer, extra friction, we should encourage them to do that. In terms of company training, obviously, all the people in the company should have some sense of cybersecurity safety, many training around not be tempted to click any suspicious emails, and be aware that as employees within a fintech organization or crypto organization, they can actually be targeted by bad actors with phishing attempts, etc. So I would say probably increase awareness around that.
Great. I think one of the last things, which I think leads into a great point from Olivia, she asked, how can you protect a client from falling for a scam and paying the scammer through your platform, phishing scam? This is back to what you were just talking about, training the clients.
It's challenging. It is challenging because with the last developments in AI and everything that's happening, fraudsters find new way to scam out legitimate customers. And this is probably goes back to built-in friction within the app. Also, don't be shy about sharing your voice on those notifications, on those nudges that you send to the customers. It's okay to tell the customer, make sure you know the person that you're about to send money to. Make sure you understand that this transaction, once you click, pay, it's irreversible. So those type of notification can help. They not always do. We've seen so many different scams, especially when it comes to romance scam and pig butchering, where customers just fall and just being the victim. But I think smart friction built in within the app, combined with awareness and training, can help customers from being defrauded.
Cool. Yeah, that definitely helps, right? How do you train people? How do you get them on board? It's not just internal, it becomes an external issue. also as well. And I think we have one last question we can answer here. And this is from, let me real quickly check, anonymous user, but how do you see your role versus the one of the processor and the networks in terms of fighting fraud?
It overlaps in many different aspects. I think at the end of the day, it's our responsibility to ensure, I will call it a safe passage, right? For our customers to transact in a way that they know that nobody can defraud them and nobody can take their money. It depends where you sit. If you sit on the network or if you are a processor, it is your responsibility in a way. I think what we try to do here with Unit 21 is really to empower the financial institution who choose Unit 21 and really to make fraud fighting as easy as we can for them. And that includes, very easy way to deploy rules without practically no engineering efforts, very sophisticated dashboards so you can understand if something is trending in a timely manner. We have a very cool case management, so your operational efficiency is much higher for your team. So this is our responsibility as a vendor, as a company who sells a product. But eventually, I think it doesn't matter where you sit. It's your responsibility to fight fraud, so it overlaps.
Yep. So I want to take a moment here. We're going to wrap it up, but I want to say thank you, Alex, for your time. Hopefully the audience got a lot of knowledge out of this. There were a lot of questions. We answered as many as we could. Feel free to email us if you have any questions outside of this. We're always excited to answer anything we can. And if you want to see your actual infrastructure and how we can help you fight fraud and prevent it, feel free to click on the link above. But I want to take away one thing and say is this is an effort that doesn't happen in preventing fraud if we don't work together. Unit 21 really cares about that. That's why, we put the manual together. That's why we made sure it was written by others and not just us, because we want to make sure that fighting and preventing fraud and money laundering is not a single player sport. You can rely on resources from others, even if it's not live, like the book we put out, and collaborate, work together, because fraudsters are working together. Why shouldn't fraud fighters also work together as well? And the compliance heroes. So I want to say a big thank you to all the attendees, Alex, as well as all the authors of the book. We'll be officially launching the book tomorrow. If you see it on LinkedIn, please give it a like, comment on it. And if you find it really valuable, we'd love for you to share also as well, and letting folks know you have a copy of it and you've enjoyed it and your thoughts on it as well. So thank you for your time. I appreciate everyone attending here and really excited what we've done and excited for the future of combating fraud and preventing it and capturing bad actors. With that, wish you guys a good day.